playing the long game with the right expectations. That's my theme for this year, and I'm going to try and help you guys as much as I can to working towards an understanding of what we really need to do to make money in the stock market. Hi, my name is Richard Lee. I manage the stockradar.com.au website for you. We use a unique high conviction strategy to focus on the stocks with a high probability of going up. That's what we want. Now, I used to love watching Test cricket, as you can see on my homepage here. With my father at the MCG, we would go to the second day of the Ashes Test. We would sit there and we'd watch players battle for the whole day. Not many wickets, not many runs, but playing the game was on their minds all the time. It didn't matter. The fascination was watching two teams battle it out for supremacy over 5 days and watch the swings and momentum from one team to another. It really was a long, drawn-out battle to get on top. Okay, it was all about tactics, strategy, and patience. Okay, the long game has alas become a short game. And that is often our focus these days. Faster is better, but not always. Addicted to the short-term hits, like T20, we went from the 50-over match now the 20-over match. Who knows if we're going to have a 10-over match at some stage. We like the long game, whether it's cricket or shares. The focus has been brought to my attention by my many conversations I've had with members. Many expectations are way too short and unrealistic, and this is not matching the way the stock market strategy unfolds and should be measured. It's the hurried world we live in. With two teenage children, this short-term focus is obvious. Yes, the world has sped up in some aspects, but not in all. Some things don't change, and thus sometimes we have to take a considered step back in respect. Okay, a 1 or 2 year view is too short in our business. The buy and holders seem to be able to do it because they just buy and forget. Ignorance has its attractions. We are more actively engaged with the market, but that expectations should be the same. That sometimes a strategy may not yield benefits in the short term. We're at the mercy of the stock market behaviour in the short term and the mercy of a good strategy in the long term. Let it play out as the homepage charts show of the 5 and 10 stock portfolios attest to. It will come right in the end. It just takes time. So turn your problem, your short-term view, into a solution and have a longer-term view of a strategy. It's not going to work all the time, but it will over time. So that's really a bit about what I want to talk about today. We're going to go through some stocks. Let me just get back down here. Playing the long game. I love a game of cricket. Okay, so we're going to go through the background of overseas markets, look at the index, the ASX 100, look at some stocks, go through the Stockradar portfolio, and then I'll finish off with trading tactics a bit later on. So strategy. What is your strategy and what do you expect from it? Okay, so we'll talk about that a bit later on. So firstly to the markets, and we've got the Dow Jones, which is doing okay, interestingly enough. It's holding up pretty well. We're getting a lot of high volume sell, big weeks, down weeks, up weeks through this area. The sting has gone out, it's gone sideways. We can see down here, these long tails here showing there is good support down here. This is the Dow Jones. This is a fairly narrow measure, but it's what we look at a lot of the time. So this index is going sideways in a high volume situation. Not so with the NASDAQ. If we look at the NASDAQ, it's been the tech heavy one, and we always talked about the growth ones are the ones that come off. But look at this one here. This has come down considerably. It's broken a bit of support. Let me just move that a little bit. It's broken a bit of support here. Now, if we look at this here, we can see some very high volume on the downside. Down, high volume pushed the prices down. That's different to high volume pushing the price sideways. Okay, so that's I've noted that one pretty clearly. The high volume has pushed this index down. Then we've had 2 very, very strong weeks of green volumes of 2 bars up here. Very weak effort as far as price goes. So this looks far more negative than the Dow Jones. It's certainly top heavy. It's now broken below the average, which is the first time we've seen this for quite some time. And we're also seeing this occur as well. So all it's really saying is risk is on, be careful, lock in some profits, a bit like our market at the moment. So that's what the NASDAQ's doing. Not so good compared to the Dow. Okay, in the commodities background, we've got crude firing along on all pistons. As we saw before, we've got this beautiful break of this resistance back here from 2018 at 84.16, and it's well on the way high. It's been a very, very sharp move, but as we've seen here, the volume has been quite high, and this whole move up here. So it's been a big wave of demand. We've broken resistance, so prices are higher in my book, and momentum revives itself here. So it's all looking pretty good on Brent. Copper and gold, they're trying a little bit. Do we have a line of hope? Both these stocks are the same sort of thing. We've got some lows coming through the bottom parts here. It really needs to to break this area above here, this R1 area, to really convince us. But there's a little line of hope here. We've got some high lows here, so buyers are keen, but it's still stuck in that range from a couple of months. We've got a reasonable bar of volume here in an up week. Okay, this is still pretty neutral. It's just in positive territory, but it's fairly flat at the moment. So if we look at gold, not that different a picture. Fairly flat in the momentum side of things. Not a lot of volume here. We've got this little slightly line of hope here of high lows, but really we need R1 to break, which will bring the door ajar. But really, if you want this to move off and open the door wide open, we've got to get through R2. So that's what the commodities look like at the moment. And I know the other ones, the lithiums and all the other ones, nickels, are all going gangbusters at the moment, but they're the main ones we're looking at this stage. So now we go to the index, and we can look at this one here. Now this one, I'm going to blow this up again. Interesting what we've got here. We've got a different change in behaviour here. So if we look at this at face value, just looking at the price, we've had a beautiful rally all the way here from 220 to 220, to late 221, probably August, I think that was, August, September. Okay, now we've had a pullback. We've rallied here twice. We've failed to make a new high here. So I've got a big red line across these highs here. Okay, and then I've also drawn a nice little line down here showing is there a downtrend developing? Possibly there is. So the sellers are trying to take control of this, and this is a significant change in business. So there is trouble ahoy. So we've got the R1 here, we've got the red line here, we've got the downtrend line here, and we've also got the moving average here, which again, for the first time in some time, it started to break below. So that is all significant and a definite swing to the sellers' favour at the moment. So it's just a situation where we're risk on. We've cut our stock backs beautifully over the last couple of months. I know admittedly we've taken a few losses. We've also locked in some very good profits. But it's been a very difficult period the last few months for us. And that's just what happens when markets do this. You can't make a lot of money sometimes. There are some stocks, if I show you very briefly, in my open positions. This is the open positions I have at the moment. There are 23 stocks in here. Okay, so if we look at all this here, you can see this. My first one was here the 16th of November. There's two banks there. So they've been held for over a year, those ones. So they're going pretty well. And we can see the returns on these ones, 44, 41. Then we go down to S32, which we've held since November 20, up 91. So you can see down here, as we go down here, the longer the trends up here, this is a shorter time period, and this will start to decrease. So we hold onto these long stocks as we do, these stocks that are doing really well. We've got Computer Share up here doing 55%. We've got a couple of other stocks picking up, Origin and Pilbara Minerals, which has done quite well. But generally the trend is from biggest profit to lowest profit, longest time from shortest time. That's how we work. So that's how the stock picks work, and this has come down from 23, from around 60 or 70 not that long ago. So it's quite a significant change throughout this period. Okay, this is what we call preserving our capital. Okay, so that's the ASX 200. It's certainly under pressure. Okay, so now we're going to have a look at a couple of stocks. Firstly, we're going to have a quick look at NAB from last week, which we saw last week. It just goes on its merry way, and it's now starting to break through this high up here, which is up around $30. So this is looking fairly good this week. We had a big test of selling here. The sellers hit this stock, but the buyers have come back. This is what we want to see. The sellers hit the stock. It affected it a little bit, but not too much before the buyers came in and whacked this back up again. An opportunity they saw. This is flat, maybe starting to tick up, I don't know, but we've held this one since November 2020, and we're still holding it. It's held above our stop. Trend intensity rating is +8. So NAB looks pretty good. I think ANZ we still hold. The other two we don't at the moment, but that's the nature of those banks at the moment. Telstra is another interesting one, which I always come back to. It's performing very well since we hit a cycle low back here. And we've had a good rally here. We did chop out, it got to resistance here, it came back, our stops were set off, so we locked in this profit here and stood aside. Well, we've now got a new high above here, so we always re-enter on a new high. So we re-entered this stock and we're holding, and at the moment we're pretty, not ahead, not down at the moment, so we're waiting to see. We had a bit of a selling test back here, and momentum started to ease, so we're just going to be a bit careful about it. But our stop is in place, and that's the most important thing. That drives our decision making from this point on. So Telstra, if it can maintain this, as we've seen before, this has had a big collapse down from $6.50 down here to just over $2, and so now only around $4. So there's a pretty good opportunity here, I think, for Telstra if it does start to consolidate above that $4 level. So keep an eye on that one. Trend intensity rating is 7 for Telstra and looking quite good. JB Hi-Fi, our nemesis we looked at so many times last year and went up and down between their support and resistance levels, and we really didn't get a lot of indication as to what it was going to do. So we've still got this chart here. I haven't changed much on it to T because we're still in this trading range. We haven't moved out of it yet, although we've had a good shot at it this week. I think a stock alert might have gone off last night. It might have just closed above there. That's only for the day, not for the week, so we wait till the end of the week. Trend intensity rating was -3 at the end of last week, which was an improvement, and it will be up again this week. We have a little bit of buying coming in here, and we've also got a bit of momentum here. The key is this high here, that's what we want to see break before we really start getting in there. And if it does go above here, there's a good base of support below it to extend a rally through here. So JB Hi-Fi is looking positive, but don't pull the trigger just yet. We're not quite ready, and we have seen a few of these rallies come back sharply after having tested this level, so just be a bit careful about anticipating. Okay, a tipple of buying and a flicker of life is what I've got down there, so it's just getting to be a little bit on the slightly on the positive side. Okay, Woodside is one that we've watched for a long time. It's been an underperformer for so many people for so long, even during this energy or crude rally. There's been a lot of things happening there, taking over the BHP oil assets, but it has slowly over the last couple of years been developing a large trend reversal pattern. Higher lows through here and a steady resistance point here, which was support before. So this is our trend reversal structure. And this is our trend reversal trigger, which I think is about $26.70, okay, which is just flirting with at the moment today. Our trend intensity rating is +2. It's above the average. We've got a bit of volume print coming in here, and also the momentum is expanding. So it still won't get really positive until I get the price trigger, which is above 26.70. So Woodside looks interesting, and again, if we go back on this one here, you can see where it came from. It was $70 stock, so we're pretty low on the cycle here for Woodside. So it's probably really, when you look at it, we always look for low risk buying opportunities, and to my mind, this represents that because we're coming off a big base, a big cycle low here. We've got some very good support here. We've got some huge volumes coming through this whole pattern here. The sellers are going to drift off and give up sooner or later and pave the way for the buyers to ramp it up, maybe up towards R1, who knows. But Woodside is looking interesting. For the first time in a while, we've looked at this one. Okay, the last stock I want to go through today is one that I did promise last week, and it's been an interesting stock. Not that it's been a really good stock for me on a trading basis, but more recently what I've got here, since we had things like the Boral thing go ahead, we know they're making a play for Beach Petroleum, and there's obviously a lot of other things on the table for 7 Grip. But what I like about this, we've got a huge resistance area at the old highs here, up at $24. And normally when you get this failure here, you usually get a fairly big reaction back. Now we've had reactions back, but nothing really significant. And this support seems really solid about $20. Okay, so we've got this range of $24 to $20, which looks interesting. We had a big selling bout here, which really pushed it down, but the buyers came in again. Nothing really extraordinary is happening down here yet. We've gone quiet. It's flat on the momentum thing. And that's probably the time you want to be a little bit wary because you get a bit boring and you don't want to look at it anymore. But it may well make a shot. If it does make a shot at $24 and can get through there, then 7 Group holding looks like an opportunity coming ahead. Okay, so that's really what I've got for the stocks today. Just a few goodies there that we've got. We have a lot of stock picks. We've got 23 of them. They're all still performing pretty well for the most part. We've chopped out of a lot of stocks that were making small losses. We've taken some profits on lots. So here we are with 23 stock picks, sort of waiting to see what the market's going to do. But the pressure, as you can see from the All Ordinaries, from the ASX 200, is on the downside, and the NASDAQ, so we've got to be very careful there. Okay, so, right, so now I want to go into trading tactics. Okay, my trading tactics this week is, I'm just going a little bit more on this long game thing that I was talking about last week. It's fairly important to understand this because I really am finding that some of the conversations I'm having with members is really not, their mind is not in the right place. They come in with the excitement, expecting us to make $1 million overnight, and it's not the way it works, unfortunately. Some people have done that, have got it at the right time to start off with. Some people haven't, but over a period of time, they will balance themselves out. Okay, so it's all about strategy. Now, playing the long game. Stockradar plays the long game, so our expectations are long, but by attacking the market in an active and responsive way. So we like to trade trends. So when we get a trend reversal happening, we like to buy it. When it gets a bit excessive, momentum gets a bit high, comes off a certain amount, then we like to take our profit. So it's just a rating of trading trends and momentum. That's what I do. That's my strategy. Okay. The attack is momentum, swings, and trends, and attack the market with conviction, which is exactly what we do. And every time we get a signal, we take it. Every time we get an exit, we take it. It's so important to do these things, because if you don't, and I know a lot of people don't, you will find yourself losing money, and it's important not to. You must have the discipline to do what you're told. Okay. The strategy is based on the market going up. Mine is I only trade uptrends and momentum swings up. So all I'm looking for is stocks to go up. So which it does most of the time, but not always. There are times when it's not going down. And we saw last week, after we had those huge flips down, we always had big moves up. But there's always those periods when we're going to have down periods, and we've got to make sure we're protected against a big drop, a COVID drop, or a GFC drop. Okay, so our money is made when the market rallies. When it's not, like the last 6 months since August, we protect. We go into capital preservation mode and wait for that market to swing up again. So be realistic. Turn your problem into a solution. As I said at the start, turn your problem having a short-term view into taking a longer-term view and being a bit more relaxed about how you approach it. Because markets go up and down, they don't go one way all the time. Why would we expect them to do that? I don't know, but we do. Okay. What are your expectations? Are they realistic? Put those pieces together to be smart, not emotional and not wanting and not thinking about dollars, but do the right thing. Put the pieces of the puzzle together properly. When you join my party or my site, don't be a party pooper. Enjoy the ride, but come with the realistic expectations, please. I need to look at weekly data, so there's, it's not an urgency about what I do. It's designed to be an enjoyable and relaxed experience, the whole thing. Okay, so it saves you grief. If you do these sorts of things, you're not so stressed. Just by knowing what to do is a really important thing. So, overnight success comes with time. Any questions? That's really what I want to talk to you about today. So, I hope the message is pretty clear. That's all I've got for today. Now, just want to go through one thing. You are patient with your children. You are patient with your workmates, I hope. You are patient with your projects. So be patient with your stock market strategy also, okay? Yes, Stockradar is different. I prefer the word special, but once you get it, you're usually in, warts and all, if you understand it right, with the right expectations and the right ideas. Every week I'll explain another aspect of how and why we work to try and help you understand this process. So stay safe, and I'll see you all next week.